Looks like we have folks joining here, Johnny.
Yeah, we have a bunch of people on this. So, hey, welcome everybody. Thank you for joining us. And I'll always say this. Now, I don't even know if we're live. I haven't got the go okay yet, but I'm just going to start talking because the people here get the behind the scenes stuff. I'm just happy you all are here, taking the time out of your busy days to be here to listen to us rant. And I do believe that this one particular webinar, whatever we want to call it, info session, is amongst one of the most powerful things. Thank you, Jake, that we can offer, that LCA offers. It's powerful. It's packed with all sorts of information. It's put together by smart people to make us look smart easily. And I think in order for us to really excel as a professional, we need to be knowledgeable, and we always need to be pushing that boundary. Anyways, I'm here with my good collaboration friend, David Childers from Keeping Current Matters. How are you today, my friend?
Johnny, I'm good. I'm good. Excited to be back. You know, you were saying before 2 weeks goes by fast, and there's things happening quickly in our business. You know, we were talking about that. So excited to catch up and just talk today, because I think what you just said is very important. The difference today is who's informed, who's driving the truth out to buyers and sellers today, and who's thinking of a way. You know, when there's not a way, who's thinking of, okay, how are we going to do this? How are we going to get the transaction done? How are we going to help people find homes? So excited to talk today.
That's it. And, I know that there's a lot of people out there. Since last time we talked to now, the big announcement was Zillow bought Showing Time. And boy, I think the real estate world melted over that one. I mean, I never cared what Zillow did, but
I think you're right. There's so much, so much talk about that, and at Keeping Current Matters, we're always going to stay in the data and insight side. My hope is we get more insights, we get more information. You know what I mean, through that. But got a lot of folks thinking about that, concerned, and but certainly understand that.
Yeah, and one thing I know, you and I talked a little bit back and forth. It's like Zillow too, and you asked me what's important about it. And let me just get to that real quick, where Western Alliance to acquire Amera Homes, lending national B2B mortgage acquirer and servicer for $1 billion. So there's another big person, another big purchase. I mean, Showing Time was 500 million. That's a lot. This is double. It's $1 billion, right? So they acquired this because, I mean, why are these big companies acquiring these? And I don't want to say 500 billion is a smaller company, but if you got 500 billion, you're a bigger company, right?
Sure.
But why are they're acquiring these companies? And it's like they're trying to control the behavior or the data or the transaction or something else like that. But the point that you made was there's a lot of companies out there with a lot of money.
Right.
So a lot of players.
I think we've seen several mortgage companies over the last couple of months go public. So certainly mortgage companies with refinances, with purchases over the last year have done very, very well. If you know anybody in the mortgage business, then you certainly know that's true. Real estate companies as well got a lot of money right now. Also, I think, Johnny, it's fair to say we'll see outside investors want to invest in real estate right now because the outlook is strong. It's a good investment right now, and that's not just limited to the individual investor. You see that all the way up the chain. And I think the fundamentals in the market have people going, you know what, this is a place I want to invest.
100%. I mean, it's a relatively safe investment because it's going to continue to grow. There's going to be ups and downs, but we're always going to get there, right? Short of something really crazy happening, we're always going to somewhat be stable or appreciate over time. The more time there is, the better the appreciation, of course. And I know a lot of people, one of the questions there's, around consumer confidence in some respects, or even agent confidence about what does the economy look like and everything else like that. And that was another thing that I had shared and we talked about real quick, was an overview of the from the Congressional Budget Office, and everything on it looks like we're in for a really good 2021. There's nothing looking that we're going to have any blips, nothing to worry about, nothing. I mean, always you got to worry, you always got to be, especially if you are running your business like a business and you're a good CEO, you always have to be doing that SWOT analysis and saying what threats are out there, what can change, and looking at the economic factors that could impact you. But according to these people, the economy looks great. So what are you seeing on your side from the data and analytics and everything that you guys pull?
Now let's talk about that, because some interesting things have happened over the last couple of weeks. Things are changing still quickly in the economy, I would say. One of the things I'll before I show a couple of slides that I will say, we talked a couple of weeks ago about, are we heading towards a bubble, and the expectations of inventory coming back in the market, and that still remains the biggest need. No matter where you're at, available inventory is the name of the game. So I believe in this market, the agent that understands that and unlocks inventory, that's going to take creativity. That's going to take a lot of different things. But right now, the one thing I wouldn't miss is sellers have more leverage than they have ever had almost. Don't miss that in the market right now, because I think some of the things we've talked about, and I'm going to get into this in just a minute, builders starting to see some headwinds, rising cost of lumber and materials, going, okay, builder confidence is still high, but they're starting to see that. I think we're going to see people bring homes to market that didn't last year, but maybe not as quickly. If that depends upon rollout of vaccinations, things like that. But it's going to take some work. It's going to take the agent that says, this is how I'm going to do it, to go out there and unlock the inventory. But let's talk about that. Let me share a couple of things and we'll talk through it like we always do, Johnny. But first here, I've got a quote from Joel Kahn from Mortgage Bankers Associations. He says this: expectations of faster economic growth and inflation continue to push Treasury yields and mortgage rates higher. Since hitting a survey low in December, the 30-year fixed rate has slowly risen and last week climbed to its highest level since November 2020. Now, I'm not here today to start to forecast rates or anything like that. We've told you what experts are saying, and the outlook is that interest rates are going to rise, and that's a signal of a stronger economy. We want to see that happen, but this is what this starts to look like. This goes all the way back to January of last year, and we know the ride that we were on there on the 30-year fixed hit a low 16 times last year, and now you start to see a little bit of this creep up. As of yesterday, Freddie Mac saying the average 30-year fixed is just over 2.8%, 2.81%. So I think we can start to say, okay, interest rates are going to start rising, and I think that's going to, people are going to say, you know what, we need to do something before they shoot up to 5% or 6%. And again, nobody's calling for that, but the psychology of that is people saying, okay, I'm starting to see that rise. I'm starting to hear that. And now is the time to do something, whether we put that off, whether we didn't do something in the last 12 months that we needed to do. And again, I go back to sellers have an incredible amount of leverage right now. They can name their deal. They can say, these are the terms that I want to sell under. And I think it's up to us to help people see the way forward right now. When it appears in a lot of cases, folks are struggling with that. Is there a way to go out and buy a new home because of the lack of available inventory? I mentioned builders, coming out from the National Association of Home Builders. They say this: lumber prices have been steadily rising this year and hit a record high mid-February, adding thousands of dollars to the cost of a new home and causing some builders to abruptly halt projects at a time when inventories are already at all-time lows. Builders remain very focused on regulatory and other policy issues that could price out households seeking new homes in a tighter market. We've talked about this rising price of lumber for a new build continuing to happen. That that additional cost is passed on to those that are building homes, those consumers, and builders looking out there saying, okay, can we continue to build for the amounts that we've been building for, and causing some to have to stop a project based on that. And I think one of the areas we talked about in 2021 we need inventory is from builders. Starts and permits, as we ended up last year, were an all-time high, and certainly want to see them continue to bring that inventory back to market. But some initial signs to say, okay, that may not come as quickly as what we originally thought. So with regard to builders, and I know that certainly is going to vary from market to market. Whether there are available lots and available land for builders to build on in some areas more than others. The other thing is an interesting study here from National Association of Home Builders. The reason active buyers couldn't find a home this time last year as compared to this time this year. It's actually from the very end of 2020. We're just now getting that data right now. So if you go back a year ago, 2019, can't find a home at a price I can afford. And you find that you fast forward to today, it's almost half of those folks saying, hey, I where it used to be, I would not get outbid. Today, I'm getting outbid for a home. Almost 40% of folks out there saying that. And I think that's the opportunity, Johnny, is how do we help folks and show them this is what I'm going to do to help you secure a home. This is what I'm going to do to help generate inventory in the area that I live and serve.
You mean your unique proposition, selling proposition, right?
Yeah,
we all
absolutely.
should have that specialty. I heard a friend of mine. He's a mortgage broker. Runs. He closed 90 million a year himself, all pretty much referral, most of it. But he also runs ads on the local airwaves here.
Okay.
And what he said is, it was funny. What he said is, everybody, and the same thing with real estate agents. Listen, everybody offers the same thing. What we can offer you that's different is a fast closing because we own the title company, and excellent communication because you have an advocate that we put in charge to communicate with you once a week to ensure. Besides that, everything's the same, right? And it's the same thing with real estate agents. 1.5 billion of them, million. I like to say billion, but there's 1.5 million, 1.4 doing the same thing. So how do you set yourself a little bit different? And I think that comes from professionalism, integrity, knowledge, and those kind of things versus just I got to get the sale. So when you can come up with that unique proposition and be able to be that advocate, be that professional, then you're able to differentiate yourself a little bit. Now, I run a video marketing company, right? We do video and coaching and production. I'm not pitching that. But doing a video series with a mortgage person, doing a video series with a builder, doing a video takes you from here where everybody else is and puts you up here, right? Yeah. So even doing something as simple as that will differentiate you. But know what's going on. Find land in other towns, right? I say that, I probably said this last week. Find land in other towns 20, 30, 40 miles out that maybe not this year, because by the time you go through all the red tape, it's going to be next year. Right. So where are these emerging? I like to call them emerging markets. Where are these emerging markets in your area that might be just a little bit out? Because you build it and they will come when there's no inventory.
Yeah, I think that point, Johnny, of partnering with somebody and bringing what we own to the table, which is keeping current matters. We're going to give it all to you. All these slides, you can have these from today and say, hey, here's a whether it's a lender, a builder, whatever the case may be, a title rep, we could fill that with anything. Hey, let me give you an update on the real estate market for all the clients that you serve. Let's partner and do that. Yeah. Because I now more than ever, people are looking for that. Even being able to talk about interest rates right now for people that have thought about doing something and saying, hey, we're starting to see a little bit of a turn starting to creep up. I'm not here to say we're at the bottom. It could be the bottom, but keeping people informed today, I think, is a key to doing that, and I love the idea of doing it with a partner. Yeah,
I think it makes it a lot easier and gives you some instant credibility to their audience, right? But sure, being that knowledgeable source in the area, because people all they get is the news that's out there, and oftentimes that news is clickbait headlines. So if you can bring some clarity to that. Interest rates are on the way up. What does that mean? I don't know. But here's the stuff from Keeping Current Matt, is a national company that we work with, the national research firm that I partner with.
Yeah.
That's all I got to say.
Absolutely. Right? And I think touting that today, here is what I'm doing. I'm a member of this group. I subscribe to this service so that I can keep you informed. You know what I mean? Yeah. Using that as credibility because, now more than ever, people want that. What's the hardest thing today on social media, other places, to find out what's actually happening? That is something that consumers struggle with.
Make sure to ask your agent if they're part of the Keeping Current Matters community.
Yeah, absolutely. That's a great
point. So you can even say something as crazy as that. It's marketing, and it's a true statement, because the value that you all bring is immense. And I do think that we need to be able to look at these. And one of the biggest failures in small business is lack of financial literacy or lack of
Mm.
business management. And this is right from Small Business Management Association, SBA. And it's the same thing in our industry. When I was coaching agents, I mean, a lot of them that I would first start talking with were jammed up on tax payments, or they owed, you know, 15, 20, $30,000. And that's all as a lack of financial literacy and business management, because they didn't properly structure their business. And it's the same thing. You got to learn to read these reports. You got to learn to read the statistics and be able to explain them to somebody. Because when you sit down, I put together a huge commercial project once that involved 3 different moving pieces of property. And I had one of them and I had access to the second one. And this guy wanted that. And then there was some hoops that had to be jumped through at the town hall to get some approvals to turn it into commercial because it was right on the line. You think I would have sat at that table with these guys, giving them advice if I didn't do my research, if I was trying to blow smoke? No. I was able to come in there with different pieces of information and say, this is why and that's why. And I think that's where we need to get to, and get some professionalism back in the industry, some professionalism back into yourself, right? Into your own business. And these reports, these statistics are, to me, one of those pieces that can really help. And for the price, it's just stupid not to do it.
Yeah, no, I appreciate you saying that. And we believe that. I often say, if you find somebody who'll do it cheaper, let us know. We might subscribe to their service, you know, because we've got a team of 7 people that research and look at the market. And here's the one thing we're trying to do, Johnny, at Keeping Current Matters, try to help you see what's coming next. Okay, so that's a lot of things that, you know, we talked last time, like, are we heading into a bubble? I want to give you that information so that you can answer that question, give your clients the facts. And there's another interesting piece forming. You know, Tristan sent me a text last night over a couple of studies, and he posted one in the Labcoat group. I don't know if you saw it, the New York Fed analysis of a lot of things financial. If you haven't been in there and checked that out, it's really, really good. But I would propose that one of the things that you're going to start to hear more about, and it was in this New York Fed report that Tristan posted last night or yesterday, I can't remember when it was the amount of debt in this country. You're going to start to hear more about that. A lot of that's tied up in in mortgage debt for consumers across the country. And so let's talk about that in a minute, because I think there's some things that, you know, going back to your point, Johnny, could be clickbait headlines that could, you know, be open for misinterpretation. I'm not going to go as far as to say they're intentionally trying to mislead people. I think they're trying to draw eyeballs in, and how they do that is with, you know, dramatic headlines like that. So let's look at a couple of things
I do good at those.
about that. What's that?
I'm really good at those.
Fed came out and said mortgage balances, the largest component of household debt across the country, surpassed 10 trillion in the fourth quarter. Expect to see more and more of that, increasing by 182 billion to 10.04 trillion at the end of December. Why is this important? Okay, we're over 10 trillion in household debt. Again, a lot of that mortgage balance is the largest component of that, making, you know, being that number right there. The interesting thing about this is homes are appreciating value. We sold more homes last year than we did the year prior. We're expected to sell more homes this year. That debt is going to increase, first of all. So when you see that, don't be concerned. Don't go, okay, here we go again. We got all these people in debt. When we sell more homes, people incur more debt. Mortgage debt is a positive debt. I believe, you know, with certainly the advantages of owning a home, the appreciation, the equity you can build, certainly a leveraged investment in a lot of cases, but that debt is growing in this country. Now, the interesting thing is, okay, how does that impact the consumer? What we look at the Fed is the household debt service ratio for mortgages. And that compares it as a percentage of disposable personal income. So what the Fed does is they look at, okay, how much mortgage debt's out there? How much, income, disposable income do people have? And what is that as a percent? You can see back in the bubble, it was about 7.21% of disposable income. Where we sit today is under 4%. And you can go all the way back to the 80s and kind of compare that and see, we sit mortgage debt in this country at a lower point than what we've seen, gosh, in the last 20, 30 years. And the reason this is important is because if somebody were to read that and say, okay, there's 10 trillion in mortgage debt in this country, this is bubble, we're heading here again. It's very different today relative to the amount of debt that's out there. Now, the next question that comes up, I think, in that logical concern is, well, people are starting to tap that debt and take out cash out refinances, use their home equity like they did back in the crash. And it is true. Home equity cashed out is rising, but I want to give you some perspective on that. It's a number that we track at Keeping Current Matters. And this is a graphic here of home equity cashed out in refis in the billions. Okay, so if you look back 2005, 2006, at the height of that, over $300 billion cashed out in cash out refis across the country. Right now, 2020 data, the first through the third quarter is what we have. It's about $100 billion in cash out refis. When we get the fourth quarter numbers, it's going to go higher. Certainly know that, but nowhere near where it was back in the crash. So people are accessing their equity, not to the tune of what they did back in the crash. So when you start to see that, mortgage debt, is rising in this country, understand the perspective of where it sits as compared to the housing crash, because it's going to cause people to go, okay, this doesn't sound good, right, Johnny? When you hear there's $10 trillion in debt in mortgages, you go, well, that's a lot of money. Let's talk about that. And so I think, having perspective on each one of these issues, whether it be from the Fed, from Freddie Mac, that's what our research team is doing to bring you that, so you have the confidence to have a confident conversation with buyers and sellers. Now, the other thing this is going to lead to as we go throughout the year, and we've talked about this with forbearance, is a rise in the number of foreclosures. Now, if you've been following the forbearance issues and the administration and moratoriums, they've been extended, and I would expect they're going to be extended. We don't know through when ultimately. I mean, we know where we sit now, but I think there's going to be a posture of trying to help people as we go throughout the year. But at some point, foreclosures are going to begin to rise. Here's this slide. You may have seen it before if you followed us. The number of consumers with a new foreclosure, the average over the last 22 years, is just over 200,000 per quarter in this country. Where do we end 2020 in the fourth quarter? 14,000 foreclosures. Now, we don't wish that upon anyone, but it is a fact in our business that it happens. And I want to prepare you for that, because be prepared for the headlines. And I don't know when that's going to start to come, but we're doubling foreclosures. Foreclosures have tripled, because if your consumer, the buyers and sellers you're working with, see mortgage debts at an all-time high, foreclosures are rising, they're doubling, they're tripling, that's fear. And we need to be able to have that conversation and break down the issues with the data so they can understand and make a powerful and confident decision for themselves, right? We don't want anybody doing anything they don't want to do, but I don't want somebody to be misinformed about what's happening relative to debt in this country and say, what does this all mean? We are able to bring that to the people we serve and show them what it means.
Sure. And one thing I hope everybody understands too, is that these numbers, what's not talked about, which is in place now, which wasn't and then, is safeguards for the mortgage lending process. So a lot of these cash out refinances, there was a line way down at the bottom there. That was me on 3 properties, right? You didn't see that in 2006. That was me on 3 properties. I tell you, I took an 80-20 no doc on both of them.
Yep.
I went from 220 to 360 overnight. Give me that money.
Right.
Right. And I paid the price. I mean, I ultimately at the end paid the price for it, but it was too easy. That scenario isn't available to me today.
Yeah.
Right. So the people with the money said, let's slow this roll a little bit, right, for the average consumer. And I think that in a respect, that's a good sign of government regulation, which, I mean, hold on. I
think there's certainly, that's a topic
that tastes horrible to say,
lot, right? We need some, but where's the line kind of thing. Yeah. And I think that the point that if you were with us last 2 weeks ago, we talked about is back then, Johnny, demand was inflated.
Mhm.
People were able to qualify for a no doc product, even if you think about a pick a pay or a neg am loan, if you remember those, where you could pay the full payment, you could pay interest only, or you could pay a negative amortization payment where your principal is actually growing. You're owing more on the house each month. That was a bad scenario. Those products aren't in the market. And
They're not in the market, and the average person's not owning 4 houses.
Right. Yeah. Great point.
Anything on, have you guys ever researched what the average debt to income ratio or what the average American spends? I remember when I first got into the business, I was told that the average American spends 103% of their income.
Just on average of what that is. I don't know of consumer spending. It's a good question. I know what it is in the mortgage business, dedicated to a mortgage payment is about 21% historically. We sit well below that today in dedication. And I think, I've thought about this a lot in the last year. If there were a silver lining to the housing crash, it is the way that people are handling equity in their homes today. Because without the housing crash, that doesn't happen. You talked about lessons learned. If you don't learn that lesson the hard way, you don't make that decision.
Yeah.
And so I think there were positives that came out of a hard time. I mean, I'll speak for myself. Everything good I've learned in life has been through a lot of times a hard, way of learning it. In the housing market, homeowners are no different than that. We've said, hey, we want to handle our equity differently. We want to do things differently today than how we did, back then.
Yeah. So we got 2 minutes left, and the half hour goes by so fast. I tell you, we got 2 minutes left, and so basically, I just want to say this: between the news that I'm seeing out there, between the news that you're bringing, looks like we got some pretty good sailing this year. So y'all, iron sharpens iron. Get your tools ready. Get out there and have a fantastic year. Educate yourself and put yourself in that position of authority. Where you're a little bit more educated than your competition, and that will help you stand out. Do some video with some professionals in the area talking about the market and what you can do and everything else like that. And finally, David Childers, how do they get a hold of Keeping Current Matters, and what do they get for 14 days?
Yeah, go check Keeping Current Matters out. You can go to trykcm.com, TRYKCM.com for Keeping Current Matters, and you can see everything we offer there. You can even try it free for 2 weeks. Johnny, you mentioned something earlier, and I was having a conversation with someone this morning. You mentioned video production and what you do. I've noticed since the turn of the new year, a lot more agents on video of being out there. And I think taking some of this information, taking other things, and being out there, being on video today is where it's at. So always a pleasure. Always love doing this with you, John.
Yeah, it's 100% where it's at. And you think about all the platforms out there, they all love video. And Facebook even said we're going video at some point, probably 2021, 2022. And they've positioned themselves, and I'm watching these little things. We all watch little things, right? You got your thing, I got my thing that we pick up on. I'm watching these things that you're doing that's heading towards the video realm. But yeah, it's not really that hard. Just overcome the fear. Just do it and edit. It's not that hard to edit. You can always go to learnhowtoeditvideos.com and take my course, but we'll just leave it at that.
Oh, that's cool.
Anyways, y'all, learnhowtoeditvideo.com. Anyways, David Childers, thank you for being here. Y'all go to Keeping Current Matters. Get your 14 days. It's free. Take a look at it. If it works, it works. I mean, here's the thing, man. You guys are putting out a ton of content. You can put out content for days. You can use their content automatically like that. You can repurpose and take the slides and rewrite your assimilation of what that might represent in your opinion and how that represents your local market or what to do in that area, and put some of your own local flavor on it. There's so many ways to do it. The thing is, you just got to do it.
That's right. Yep.
So, all right, everybody. See you in 2 weeks. David, thank you. Be safe. Be warm, everybody.
Take care.